We're going to start with Groupon because the stock is getting hammered today. More questions about the business model. Dan Gallagher's in San Francisco to tell us about this. Dan, should I really be questioning Groupon's fundamental ability to do what they say they do?
Well, that's the question that people faced this morning. On Friday, that we saw that they revised their fourth quarter results, and the reason they did so is they cited some problems they found in how they reserve for refunds. And the company kind of pointed out that it was the growth of some of these larger deals, things like laser hair removal and other things that are kind of big ticket items, not so much restaurant deals. And there seems to be a higher return on those, and so they were not reserving to the amounts proper for that. And so they went back and they had to revise some of their results for the fourth quarter to account for that.
Yeah, but Dan, I mean, there have been accounting issues surrounding Groupon since they first filed their IPO papers.
From the beginning.
From the beginning.
Yeah.
I mean, how fundamentally flawed is this business model?
Well, I think it's two issues. One, there's the business model issue, and then secondly, there's the management credibility issue, and they're interrelated. And so I think a lot of the credibility attacks on Groupon have related to their accounting methods and the restatements and the way they've had to revise their accounting procedures throughout the short history of this company. Now this second issue comes along, and a lot of people are wondering, is there another shoe going to drop here? Because the statement they put out said there's problems with their internal controls, right? And so it leads some people to believe, well, what other problems are there that they may be having?
So we haven't found out yet.
And the stock's already down 12%. I think some Wall Street people have moved it from a hold rating to a sell rating. So how many, the issue is really credibility at the heart of this, and it's like, how many more issues can they have before people really lose complete faith in the management of this company?
Yeah, and Dan, that's a good question. I mean, look, you can see the stock today. Some people have lost faith and they're voting with their keyboards. How much more time do they have? I mean, it's not like they have an unassailable business.
It's true, and they're definitely facing a lot of competitive issues. The reactions I'm seeing this morning tend to vary between some of the more bullish analysts still say that this is a part of a company that's been very fast growing, that's in essentially a new space. So it should be expected that there's still some things to figure out. But a lot of the reactions are more to the fact that when you look at the past state problems that they've had that you guys have mentioned, along with this one, I think there's a lot more investors that are kind of stepping back from the stock and are going to take a wait and see approach at the very least for a couple quarters to see how the reports sort out, to see if they can they outperform or are they going to still have problems. And so one of the downgrades this morning mentioned that very risk. He said, this may be just a matter of a fast-growing business, but we think it's time to step back for a while and see how they do.
You said that, in my mind, it makes me think, and Spencer, I want both of you guys to weigh in on this. Did they possibly go public too soon? I mean, was this company fully baked? Were they fully cooked? Should they have come out of the oven?
Yeah.
Was there more work to be done before they cashed in?
That is a very good question. I've said from the beginning that I think it probably was not a good idea for Groupon to go public so quickly. I believe they went public after they were in between their second and third year of existence, which is, even in a boom time, is on the quick side. And I think what these issues are showing is that, the model is not baked at all. Yeah. And maybe the management team needed some more time to season itself and sort of get used to this incredibly fast growth rate that they've been seeing. And I think that, we probably won't see too many more companies go public at such a young state of their evolution, and that's probably a good thing.
Yeah. Dan, last word to you. I think this will affect the stock. Will affect the stock, but I don't think it will affect people who are just using Groupon as a service. Will it?
I don't think so at this point. I mean, I think people who use Groupon make their decisions based on if they find the service satisfactory or not. And one could even argue that if they're generous with refunds, if this issue shows that they're kind of generous with refunds, that's something investors may not like, but customers may like, and make them come back for more. So it's hard to tell whether this kind of issue or these other accounting issues really affect the end demand for it. I think that's more of a question of what kind of competition comes up, and does that competition offer, better deals or integrated with other services or not? And I think that's probably what they more have to worry about on that front.
Right. All right, Dan Gallagher in San Francisco. Thank you very much, sir. Talk to you soon.